And we're live.
I know it was off. I know it was off.
Oh.
I was caught off guard. I wasn't ready. I thought I was ready. I thought I was ready, but I wasn't.
Nope, didn't happen. Did not happen at all.
You know what? I might have to say it again, just surprisingly. We'll see. We'll see.
Oh, okay. All right. So first things first, how are you? How are you doing today?
I'm excited. How are you doing?
I'm pretty excited. It's been quite the week. And let's see here.
Well, let me get to sharing.
Yes. Oh, see, look at that.
Yeah. Okay. Hold on. Let me share.
All right. So, y'all, welcome to the Come Up series. If you notice, the title's a little different because normally we do Hot Take Thursday and we normally do something pretty interesting. But today, it's a little bit different because, as you can see in the title, there is this hope that certain things may take place. We don't know yet, but, we're going to see if we could perform some YouTube magic, right, Jolene?
Yes. I like a little magic, little razzle.
All right. So welcome, everybody. I'm Mark Monroe, accompanied by my wonderful co-host, co-creator of the Come Up series,
Jolene GC, in the place to be.
And this is the Come Up series. And if you haven't subscribed yet, well, today may just be that day that you may want to hit that button down below because there's a ton of great content. And then on top of that, there's some pretty phenomenal people that you'll meet and some pretty good learning things that you'll learn on this series. But then on top of that, if you like the video, go ahead and hit the like button. But if you didn't like it and if you think that we can do better, there's always room for improvement. So you can hit the dislike button, but please tell us why. And on top of that, if you want to be in the know, go ahead and hit that bell so you can be a part of the Cool Kids Club, aka the Notification Squad. All right, so Jolene, we've got a lot to get through today because there's been a lot going on in the markets and everything else. Mm-hmm. My God, there's just a lot. So we're going to just take a deep breath.
Together, is this collective breath?
Yes, it's a collective deep breath. Okay. All right. So without further ado, because we got a jam-packed episode, so I'm going to turn it over to you, Jolene. Go ahead, rock the mic.
All right. So y'all, it is Hot Take Thursday, a very extra hot Thursday. And I'm really excited. The market did good today. So the Dow was up 188.57 points. S&P 500 was 40.53 points. The NASDAQ, again, the NASDAQ was up 329.84 points. We got the VIX coming in at 21.91 points, and the U.S. 10-year note was at 1.5%. It's pretty much has been staying within that realm. And as you know, for sector performance, there are 11 sectors. We track the top 3 and the bottom 3. And so coming in again at number 1, we have tech, communication services, and consumer discretionary. So that's good. And then for the bottom 3, we have consumer staples, utilities, and financials. And you will see that financials was in the bottom, and you will see that reflected in our pick list, which you can find the Come Up Series top picks at that Come Up Series on Instagram. And so coming in at number 1, we have CWeb, then we have SDGR, and then we have TAN, and then we have I'm so caught off guard now. MasterCard, Target, and JP Morgan coming in at the very bottom. And then for our 52-week highs, we have FTNT, BA as in Boeing, V as in Visa, and MA as in MasterCard. So that was our performance. So far, we're doing pretty good. All of the top picks were pretty much in the green with the exception of very few were having just a slight pullback.
Can't win them all.
Direction. Yeah.
All right. Well, we just got surprised. Yo, ladies and gentlemen, we have Cathie Wood here at the Cookout with us. Thank you for joining us.
Welcome.
How are you this evening?
I'm great. I am so happy to be here. I love you guys.
Well, we are happy that
I'm
you're here.
good. Like it's been a whole vibe for me today. It's just
Yes.
all right. So we got some stuff to get to before we can get to some of the stuff with you, Cathie. So let's just get some standard housekeeping out of the way. So Jolene, so normally what we do, everybody, is we always talk about our heroes and sheroes. And so Jolene, do we have any heroes, sheroes within Black history today?
We do. So today we have King Hannibal of Carthage. King Hannibal is said to be the greatest military leader and strategist of all time. Hannibal was born in 247 BC during the beginning of the decline of Carthage, then a maritime power near present-day Tunis in North Africa. The Carthage population was a mix of Africans and Phoenicians who were great merchants trading with India, the people of the Mediterranean, and the Sicilian Isles. Hannibal had 80,000 in his infantry, 12,000 in his cavalry, and 40 African war elephants. He conquered major portions of Spain and France and all of Italy except for Rome. Hannibal marched his army and war elephants through the Alps to surprise and conquer his enemies. In one battle, the Romans, led by General Scipio of Africanus, put 80,000 men on the field led by Scipio to defeat Hannibal. When Africanus attacked with his entire army, Hannibal had so studied the grounds that he arranged his African swordsmen and elephants to trample and slaughter them. So here are a couple of quotes from the king. Many things which nature makes difficult become easy to the man who uses his brains. Another quote, perception is a tool that's pointed on both ends. So next we have, for our shero, we have Queen Nandi of the Zulu Kingdom. She's the mother of Shaka Zulu, one of Zulu Kingdom's greatest kings. The Zulu nation was a superpower in the Southern African region. Queen Nandi's story is one of resilience as a mother and one of hope against social pressures. Historians say that she fell pregnant with Shaka Zulu out of wedlock. So Shaka was king. He was the king's son, and she endured great humiliation, but remained steadfast with raising her son. During Shaka's reign, Queen Nandi had significant influence over the affairs of the kingdom. She was the voice of reason during times of political strife with neighboring kingdoms. King Shaka was able to go on many exploits because of her support. Look at that, support of a woman, love it. It extended the borders of the Zulu kingdom over a period of 12 years. So this was the Warrior Kings and Warrior Queens edition of our Black History Facts.
Shout outs to you, Brian, our wonderful historian, for giving us that awesome hero and shero. So, all right, so Jolene, are you ready?
Oh yes, I am ready. Are you ready?
Cathie, are you ready?
I am ready.
All right. Now, of course, given that this is a cookout, I have to say, hey, Auntie, welcome. All right. So without further ado, for the folks that don't know you, can you just tell them who you are? Because I know that you have quite the reputation, but there may be some folks out here that may not know who you are. So please, just for the people, just a brief introduction.
Oh, sure. Well, right now, I founded a company called Ark Invest, and I really should start out by saying I'm a mom and I have 3 children and my angels from God. But I think what we're here for today is to talk about, I started a firm in 2014 to focus on investing in disruptive innovation. Innovation that is going to transform the way the world works and give us all a lot of opportunities. So, we talk about the foundation of our research is around new technologies, DNA sequencing, collaborative robots, energy storage, think electric vehicles, artificial intelligence, blockchain technology. So we spend all of our time researching those areas and trying to figure out when they'll be ready for prime time and what would be the best way to take advantage to capitalize on them, either from an investing point of view or an employment point of view. We're all about change and trying to help everyone get on the right side of change, because there's so much change happening now. So one of our missions and values is to educate. So we're here to help, and to help anyone, parents, grandparents, people who are going through school, to figure out, hey, how's the world going to work, and how can I get on the right side of change and ride those waves?
That's amazing. That is pretty amazing. I guess, which kind of leads into like the first question that I definitely had, and I'm probably sure that Jolene, you also had the same question. We prepared some pretty cool questions for you. And some of the cousins also took part in this putting together the questions. So I guess with that is, what is the motivation and purpose of ARK, and how is it that ARK differs from what has always existed on Wall Street?
It's a great question. When I first started in the business a very long time ago, so I started, I know I'm going to seem ancient when I tell you this, but I was in college in the 70s.
Okay.
And one of my professors introduced me to a firm called Capital Group on the West Coast, which was an investment company that was a great research firm. And so I started there. And I said, wow, I could keep learning while I work. That's what I felt. It was like, whoa, wow, I can keep learning about how the world works while I work. It's like paying me to learn. And so that was a big deal. And what I've done since then is learn about how the world works at the same time that the rest of the Wall Street world was trying to figure out, how do we avoid risk? And the reason for that was in the tech and telecom bust. That was 20 years ago.
Yep.
And then 0809, the financial meltdown, which
Correct.
was 11 years ago. Wall Street was like reassessing everything and saying, how do we avoid risk? And what happened is, too much of Wall Street today is about avoiding risk. And what we were saying, wait a minute, there's so much opportunity out there. So much opportunity. Let's start a firm which founded on, sure, we'll evaluate the risk, but all of you are reminding everybody the risks. Why don't we start a firm that focuses on the opportunity, the future? Wall Street today is what a lot of asset managers do, is they focus on so-called benchmarks, S&P 500, MSCI World Index, Russell 2000 or 3000. And they're saying, okay, let's use that as our bogey, and then just make changes around those indexes. We don't pay attention to indexes at all. We're just saying, wait a minute, how's the world going to work? And let's take a white sheet of paper and figure out how an autonomous car is going to work. We don't care about indexes. They don't have autonomous vehicles in them. So it's a very different way of thinking about the world. But the reason I told you about Capital, where I started, is that's what they did. So it's back to the future. Nice.
Well, Cathie, my name is Jolene. It is a pleasure to meet you. Thank you so much for being here. Your presence in this investment world inspires so many other women to step into this space. So I want to thank you right now for that. And one of the questions that we had really comes from, on one of your interviews, you had mentioned how analysts kind of are in silos. Yes. And how in their approach to investing. And so I would like to know, how do you develop a theme for investing?
Right. So we're focused only on disruptive innovation. And what that means is, innovation that's going to transform the way we live and work. We're not as much focused on, let's say, 5G. 5G sounds fantastic, but we already went through 2G, 3G, 4G, 5G. That's called sustained innovation. And we're a fan of that, but we really want to focus on innovation that is going to transform our world completely. So this idea of silos, the way the traditional world is set up, we in any one firm on Wall Street or elsewhere, you'll find analysts who are really, really good at a very narrow slice of the world, which is how investing used to work. And many people think it still should work that way, but we think innovation is going to blow that world apart. And the reason is the silos will prevent these analysts from seeing the new technologies that are going to sweep right through them. So to give you an example we're known for, but Tesla. Let's just take Tesla.
Yes, let's take
Tesla. So Tesla. Who on Wall Street follows Tesla? Auto analysts. Auto analysts should not be following Tesla. Tesla is, yes, at a very simple level, is an auto manufacturing company. But if you think about what a Tesla is doing, it's really, given that we think it's going to be a winner in the autonomous vehicle network, it's a robotics company, because it's number one in electric, certainly here in the United States. It's an energy storage company, not an internal combustion engine company, because autonomous will be powered by artificial intelligence. It's an artificial intelligence company. So you really need a few analysts to figure out what Tesla really is worth. Auto analysts today are very focused on gas-powered vehicles. They will be extinct we believe, in the next 10 years. So these analysts have to figure out what to do next. They're not robotics or energy storage or artificial intelligence or software as a service analysts. So they're not well placed to analyze Tesla. So this is what we mean by siloed and really backwards looking. The transportation is going to be defined as anything but internal combustion engine, right?
Yep.
So, yeah.
So
does that make sense?
That makes
that makes a lot of sense. And
you're speaking my language.
The distinction that you articulated between, sustained innovation is really key, because it is so easy to be like, okay, 5G, let's figure out what's going to be the next, big thing in 5G, and doing it your way, like thinking through the themes and all that actually makes more sense. So.
You're right. 5G is going to make everything that we research even better, but it's not a big breakthrough. It's a huge enhancement. Mm-hmm. But we've already been through a lot of G's, right? And it's good. We're really happy that there's another G that's going to be faster and better and all of that. But it's going to help make everything that we research better than otherwise would have been the case.
It's great, that we have faster data. The question is that, for me, it's like when I look at 5G, I'm like, does it create neural networks across municipalities? Does it help create neural networks across vehicles where vehicles can talk to each other and be on the same communication grid? Mm-hmm. And, that's where I look at it in the sense of, okay, hey, have we reached that part? We talked about it a few episodes back where we talked about the diffusion of innovation. It's like, are we there yet? Where it's like, where we talk about neural networks, even just within automotive. I could be on this all day, so I'm going to move on because I'm going to get off the soapbox.
But you're right. You're right. It's going to make everything better, but neural networks are the main reason autonomous is going to happen, not 5G. Right. It's going to speed everything up, make it better, but neural networks are going to make it happen.
Yep. All right. So with that, given that we've already started talking about innovation and we started talking about the future, so we've gone through a pandemic, and we're still in the process of the economies, or the global economy is still on its way out. So we've seen some changes. Like, for example, you've seen tech companies like completely remove their leases off of the table, where they're okay with their employees working from home. So I guess the question that we kind of ask is, what is the future of work, and what skills should youth, aka the future workforce, what should they consider?
Future of work. We're, as an organization, trying to figure out, okay, we have done so well working remotely over the last year. Our productivity has exploded, mostly because we're not traveling to a meeting. That takes a half hour. Then we have an hour meeting. Then we have to travel back a half hour. Now my day is half hour, half hour, half hour. My productivity has gone up fourfold. That's what I really believe. So future of work. There are going to be some positions in industry where you're going to need to come together, certainly in terms of tech and operations and compliance, and some of that can be done from home, not all. As far as our analysts, a lot of what they do can be done from home. And I think a more mobile and agile workforce is absolutely possible. And to retain and attract talent, we may have to have a hybrid work situation where, some will need and want to come into the office, others won't need it. So I think we've opened a world to much more flexibility in the workforce. So Mark, your question to me was, what is the future of work in terms of how do we steer people to the right side of innovation?
Correct.
I think that's really important. And you've been wonderful to weigh in on the foundation. I'm really thinking about this, and so is the team from an education point of view, because we want to make sure that we guide young people towards the right side of change. And what I have found so liberating about innovation is that it levels the playing field. If you go to our website, ark-invest.com, you will see a very young group of people, including our analysts. And no one thought this was possible. Most people said, oh no, all these people have to be educated with an MBA and have to then move through these internships, and then maybe they can get into our world. That's changing. And I think what's happened is, if you look at our talent, what you will find very young and not at all traditional in terms of their backgrounds. And that's a good thing.
Yes.
It's a very good thing. Innovation levels the playing field out there. Our analysts, they're very young, as I said, and just take healthcare, for example.
Yep.
One of our analysts came directly to us from school. And because he had experimented with CRISPR-Cas9, which is gene editing, and been at the forefront, he was at Johns Hopkins, at the forefront of a lot of innovation that's taking place. He had that curiosity, that desire to become a part of innovation. He was able to come to ARK and run circles around the most senior analysts in the Wall Street world. Why? Because, because he in school,
direct experience.
He had experimented with CRISPR-Cas9. He knew all of the new technologies, and he was thinking about the world differently, because healthcare hasn't changed in 30 years, I'm going to say.
Yes.
Hasn't changed, but now the convergence of DNA sequencing, artificial intelligence, gene editing, and other gene therapies is transforming it incredibly. He knows more about that than people who have been in our business for 30, 40 years.
That's amazing. That's amazing.
Yeah. And I think it's true in every industry. You don't have to, if you develop a passion for innovation and you go onto the web and you just you devour everything having to do with innovation, you're probably going to be in a better place to succeed than those who've been in business for decades. So can I give you, and I'm not sure, can I give you an example of how, because I think you'd be interested in talking.
This is the Cookout. Feel free.
So we are involved in a partnership with Jericho Partnership.
Yep.
Jericho Partnership is in Danbury, Connecticut. And Carrie Amos, who is the president, when the coronavirus hit, she said, oh my gosh, these are at-risk kids who usually are at Jericho Partnership from 7 in the morning to 7 at night. Just like, we need to make sure that the people who are influencing these young people are giving them the right education, and giving them the right influences and motivation and incentives and so forth. And she said, whoa, they can't go to school anymore. And so now we have all this time with them. A lot of it's going to be remote. What can we do to help change their lives? Now, these are at-risk kids. And what we did is a 6-part seminar on drones. We're saying, okay, what would make these young people excited? These are teenagers. What would capture their imagination? And so we did Tasha Keeney and Sam Corris, who are 2 analysts focused on autonomous everything, said, yeah, we'll help with that. And the 6-part seminar with these kids, we were on Zoom like we are right now.
Yep.
In the early days, they wouldn't show their faces. They wanted to be there, but they didn't want to show their faces. I'm not kidding. At the end, everyone wanted to show their faces because drones had fired them up. And at the end of it, we were able to say to them, do you know that you now know more about drones, which is going to be a huge industry.
100%.
Than anyone in Connecticut, maybe, well, then 95% of the people in Connecticut and in the United States.
Yes.
If this inspired you, you go and pursue that on the internet and we will help mentor you. So yeah, I think this is going to happen in so many areas of innovation, and we have a great opportunity here to level set. This is an even playing field. And, just, I think inspiring young people is going to unleash the energy and imagination and enthusiasm to really help keep the US #1 in terms of innovation. China's fast after us. This is why this is important. I find young people to be the most inspiring when it comes to their imaginations, their energy, and their enthusiasm.
That's where true education comes from. Also, it spawns from passion, and it also spawns from creativity. So to have that available and open and, ready to teach and to also inspire, kids from all different places. I mean, that's amazing. That's amazing.
Yes. And I think what's very interesting, the world didn't change that much, not too much. I'm going to say from the 70s through the 2000s until maybe 2010. Then all of these innovation platforms started taking off.
Yes.
So the old world was not about a lot of change. It was about who you knew and networking and blah, blah, blah. Now you can, with creativity and imagination and energy and enthusiasm, anyone who's listening to us, if they are passionate about one of the innovation platforms or the technologies supporting those innovation platforms, if they can run circles around the traditional world order. So
Yep.
that's an important message. Now, Mark, I'm
Yes.
seeing you're wearing some of our sweat.
Yeah.
Oh, I love it. I love it. I love it.
Does it look good on me? Like, you know, I have
Great
to.
on you. It looks great on you. I was wearing that shirt today when I took my walk. Yeah. Yeah.
Jolette's a little mad at me right now because
my shirt.
That's why I'm wearing but my own, and I just love it. And you know that all of the profits from that swag
100%
to COVID relief, right?
Yes.
So thank you.
What I appreciate about what you're doing with that is this value of generosity, as well as the value of passion that you just spoke about.
Yes.
As you may or may not know, the Come Up series is on a mission to close the racial wealth gap within one generation. And that will take a lot of passion. And also this thing you mentioned about like leveling things and making knowledge and applying that knowledge accessible. And that's one of the main reasons why the Come Up series does not charge for any of the things that we teach, because we feel so strongly and this sense of urgency to close this racial wealth gap. And if it's just a matter of people having the knowledge, then why not? Why would we charge people? So with that, what advice would you give to us, all the cousins who are aiming to close this racial wealth gap? And we're aiming to do that through investing.
Oh my goodness. Yes. Well, what I have, okay, so we'll talk about investing first, and then we'll talk about the gap itself.
Yep.
On investing, I think, again, I'm going to draw a comparison between the traditional investment world and the new world.
Okay.
And what I'm finding, and I don't think I'm too welcome when I'm saying this to the institutional world, but I say it anyway because it's true. What I am finding is the individual investor who is not encumbered or weighed down by having to pay attention to benchmarks like the S&P 500 or the Russell or the MSCI, but just is saying, I want a piece of the future. I find that individuals are in a better place to achieve that than institutions are, at least up to now. Because institutions are saying, well, this is my benchmark. I need to put those stocks in there, and maybe I won't weight them as high, or and I'll take this bet by underweighting or so. That's not investing. You know, it's interesting when I was trying to explain to someone who was not in the investment business before I started my firm, I said, this is what I'm trying to do. And he said, when he finally got it, aha moment, he says, oh, so what you're telling me is the future of investing is investing in the future. And I said, yes. You know, we're back to the future. That's how I started in the business. But because of the tech and telecom bust and the 08, 09 meltdown and all of the risk metrics that entered into our ecosystem, I'm finding that a lot of the institutional world is investing in the past. They're investing in these indexes where companies who are the biggest part of the indexes are there because of their past successes. But if we are right, and the 5 platforms and 14 technologies around which we have centered our research, if they are going to disrupt the traditional world order, that kind of investing is going to deliver disappointing results. And investing in the future or these technologies is going to deliver superior results.
Right.
Now, yes. Now, what you'll hear a lot of institutional investors say is, wait a minute, been there, done that, That was the tech and telecom bubble, and that ended in tears. And that is true. It did end in tears because investors back then, they were willing to dream the dream, and they were throwing their money at the dream, and they weren't looking at the underlying fundamentals of these companies. Many of them went bankrupt. Today, this is now 20, 25 years later, the seeds were planted back then. Now they're flourishing. And so investors who are looking to the future are going to be better off than those who are tied to indexes. So that was the, now, in terms of the gap, this is what I say to everyone. So I started in the business in the 70s, very few women. I was the only woman in the room usually. And so I understand what we're talking about here. What I did was I would, and thank God I had great bosses, but I'll give you some advice on that too.
Okay.
I was very, very fortunate to be introduced to people who wanted me to succeed. And my mission as an employee was to make those people, men or women, look great.
Yep.
And what's great about young people, is we actually know more about the future than older people. And I did back then, and I thought I knew how the world was going to work. So I needed to teach my boss, because he of course didn't know about the new world. And I did it with humility. I never like he was my boss and he knew a lot about a lot and a lot.
Yes.
So I wasn't going to take that from him, but I knew a lot about the future. And so what I tried to do is say, okay, I want to make my boss look smarter and more forward thinking than any of his peers. And I would do things for him and prepare presentations. He didn't expect it. I did it. And when he started saying, oh, okay, yeah. And I was starting to save him time and energy and work.
Yeah.
Started running with me. And he then opened the door to more opportunities. Now, there are some bosses out there who are going to just take, and not give a young person credit for the ingenuity, imagination, and forward thinking that they're bringing to the task at hand. And what I would say there is that if that's true, then you need to leave that situation and go find someone else, because someone else needs you. Someone else needs your imagination, your ingenuity, your enthusiasm, your energy. And so you can't get stuck. I was very lucky because I didn't have bad bosses. They knew that I was determined. I was going to try and make them look good, and hopefully did make them look good. So that's the first rule. The first way I have led my life in terms of, I'll just give you a sense of what people thought of me when I started. And I was 20 when I started in the business. And at the time, no computers, no wireless. There was, information was difficult to get. I'm ancient, but I'm proud of it. So, and I want to share lessons learned. I do. So I would be, thanks to my boss, invited into these meetings with great leaders, economists, strategists, and so forth. Now, remember, I was young. I thought I knew how the world worked and that they didn't know, but I had to be humble. I had to listen and just pick my spots. And so I would walk into a room and I would be the note taker. And everybody thought I was the secretary, and that I was the secretary, and fine. But then I would pick my spots, and I would hear someone say something that I said, oh, I think I might know something about this that they don't. And I would say something and they would say, what? Ooh, are you? What the heck? We thought you were the secretary. And you know what? I thought that was great because low expectations was what worked in my favor, because when I actually said something and it was smart and it was like, not in their face, I was very respectful, but it was like, do you know what you're talking about? Do you know this new world? Always have to be very respectful, pick your spots, very not in your face. It worked. That double take, it's like, that really helped my career.
Okay.
Really my career. And then the second thing, in terms of the gap, we've touched on it already. Innovation levels the playing field.
Yep.
There are people out there who have spent 20, 30 years of their life in the old world, and that's all they know. The world is changing so rapidly that and their responsibilities, especially in our business, have been set up in such a way, to the siloed way, as you said, Jolene, that this new world is catching them off guard. So if you can get into a situation where you're working with those people who really aren't tuned into the new world, and again, a boss who needs you, those are the best situations. But again, I will also say there are people out there who will just take, not give you any credit. You have to get rid of them. You have to leave because you have so much more to offer.
Wow.
Yeah, thank you for
Okay. Cathie, we got to switch gears, because there's been this thing that's been like, that we've been seeing in the news for quite some time. There's been quite the volatility that's been taking place in the market, whether it's rising interest yields, inflation, meme stocks, a bunch of other things. How does your team at ARK see, when it comes to the current market, how do you guys, do you stay tried and true to your thesis, especially given all the things that take place? Like, do you stick to your script, or essentially do you ever have to find ways? Do you ever find that ARK has to sometimes pivot its strategy or its thesis in order to, like, does that make sense? So with all the things that are taking place, do you ever find yourself pivoting just because of the fact that certain events are taking place, or do you stay tried and true to that thesis?
Well, I have the luxury of both an economics and a finance degree. And I started in economics, and I've carried it with me all the way. So I can tell you about interest rates and inflation today. Interest rates are going up, and that's a good thing from my point of view. It means the market is working again. That's a really good thing. We made the same argument in late 2016 when the stock market took off. It was after the election then, because of tax rates were going to come down, deregulation was going to take place, and the market thought, okay, this is really good. And what happened was value stocks, like old world stocks, took off at that time, just like now. Today, if you look at the stock market today, energy and financials have been the top performing sectors. Energy up 40%, financials up 17%, I think, year to date.
Yes.
And in our world, given what we do, consider the source, but we really believe in what we do, those two sectors are going to be the most disrupted of any during the next 5 to 10 years. And so we're saying, you know what? We're really happy that the bull market has broadened out here to incorporate more stocks and more groups, because a lot of value stocks, true value stocks, have been left behind. So that's great, because we don't want to get back into a situation like the tech and telecom bubble. In the tech and telecom bubble, the market ignored all stocks except internet stocks. And so every company and industry tried to say, oh yeah, we're an internet, we're involved in the internet age. And no, it was all wrong. But today, we truly believe that energy and financials are two of the sectors that are in harm's way. There
Yes.
are some very good stocks within those sectors that are value stocks, but be careful. We have not pivoted. In fact, what you will hear, in fact, one of the reasons we haven't is if you look at the reason interest rate, many people think interest rates have gone up. They think it's because of inflation, that inflation's going up. And inflation will go up in the next few months because what happened last year? Last year, if you looked at the futures market, energy prices went negative. That's not possible in the real world. And today we're over $60 in oil prices. So think about that over 1 year. So we're going to have a year over year. Yeah, there'll be inflation. CPI inflation could go to 3 to 4%.
Okay.
And I'm sure a lot of people are going to be worried about that. We are not worried. We think it's ephemeral. And that if anything, there are two huge sources of deflation taking place right now. One is good, one is bad.
Okay.
The good deflation is caused by all of these new technologies. They all are associated with costs coming down. To give you an example of that.
Okay.
So if you look at battery technology, battery pack systems, for every cumulative doubling in the number of electric vehicles produced, and they're starting to ramp pretty quickly right now, costs of battery packs will drop by 28%. Think about that. That's huge deflation. If you look at DNA sequencing, for every cumulative doubling of the number of genomes sequenced, and this is also at a very low level, so it's going to happen quickly.
Right.
The cost of sequencing is dropping by 40%. And that's short read.
Writes law.
28%. Think about these deflationary forces. Very positive because that deflation drives up demand. Very positive. There's another deflation taking place. And this is the bad deflation. These are companies who leveraged up, took on more debt so they could buy back their stock and increase earnings per share to satisfy short-term oriented shareholders. They wanted their profits now. Buy back your shares, my earnings per share will go up. They should have been investing in innovation. They didn't. What's going to happen to these companies? They have so much debt now, and they're on the wrong side of change, like gas-powered vehicles, so that when the world shifts to electric vehicles and gas-powered vehicles continue to go down, they will have to cut prices on their cars to clear the inventory and to service their debt. So two sources of deflation. We are not worried about inflation. We're not worried about inflation. And in fact, innovation is inherently deflationary. That is a really good thing.
Very good thing. Yeah.
We haven't pivoted. In fact,
are we hearing that ARK is definitely staying the course in its thesis?
Amen. And in fact, what we are doing is concentrating our portfolios back to our highest conviction names. They're pure play innovation. When a bull market extends like it has in the last year, we will add stocks that are kind of cash-like to us, like the FANGs, Facebook, Amazon, all of those, because they're very liquid, easy to buy and sell. And so when the market goes into a risk-off situation like we've been in the 2 weeks prior to this one, what we will do is sell those names and concentrate into our pure play names, pure play innovation names that are smaller cap and are the next FANGs. So I know a lot of people, there's been all kinds of criticism around what we're doing and the way we're doing it, and a lot of negative sentiment. It's made me feel better because there's so much fear, uncertainty, and doubt. The best bull markets are built on a wall of worry. That's what we're in, and I'm happy for it.
Now, Cathie, when you said, concentrating into your highest conviction stocks and picks, at the Come Up series, we call that keeping it right and keeping it tight.
Yes.
And,
Oh, I like it.
Yeah, keep it right, keep it tight. Because we at the Come Up do not believe in raggedy portfolios. And raggedy portfolios are those where if someone looked at your portfolio, you couldn't tell what your convictions were because they'd be all over the place. You would be chasing things, and that's just not how we're choosing to go about building wealth. But Cathie, you have shared so many, dare I say, big ideas. And so we want to talk to you more about what have you seen in your personal take as far as building generational wealth as it relates to equities, just a further elaboration on building generational wealth as it relates to equities, and then on the other hand, or in the context of these big ideas.
Yes. So my sense is that your audience is very young, and therefore your audience should have a long-term investment time horizon. Your audience or users or however you
cousins. We call them cousins.
Cousins. Your cousins. Yes, I picked up on that. Yeah, I noticed that. Takes me a while. I get it. So your cousins they're very young, and they should have a very long-term time horizon. In other words, they should not look at their portfolios every day in a volatile market, because they might. If you look at in the last 2 weeks, if you looked at our portfolios, one day this week, in the middle of the day, our flagship portfolio was down 11%. Well, that's ridiculous, because we know that these innovation platforms and technologies are going to lead the way in the new world.
Yes.
And so, I look at the down 10%. I'm saying, okay, I don't know why there are people selling our stocks, investors, speculators. I believe there was, whether it was hedge funds or institutional investors, there were a lot of investors, speculators, high frequency traders betting against what we do.
Okay.
And to be honest, it makes me feel good that this is what makes a market. This is what makes a market. We have a very strong point of view that we're on the right side of change. They have a very strong point of view that in the short term, because that's what they are focused on, our valuations are too high as interest rates go up. And what we say to them is, this market never believed that this level of interest rates would persist. It has been priced as though interest rates are going to normalize in the 4 to 5% range. Well, guess what? We think interest rates will normalize somewhat below that. So there should be valuation support for what we're doing.
Are you thinking more like 3 to 4%?
We are saying 3%, 3%. And the reason for that is this dual set of deflationary pressures that I mentioned. Think about that. If you're on the right side of change and you're in an industry where the unit growth is exploding while prices are coming down, your companies are going to be worth a heck of a lot more in the future. If you're in industries where prices are coming down and units are coming down because you're on the wrong side of change, you're in trouble. So I actually think that the whole interest rate fear in the last few weeks has been good, shaking out the weak holders of our funds. Yep. Just get them out and keep the strong holders in. Your cousins should be in the second group, which is you're looking at change, you're embracing it, you're looking at deflation as a good thing because it's associated with demand exploding in these new technologies. Just stay on the right side of change. And you're going to be, our compliance department, Kellen, I love you, would be mortified if I promised anything, but I really believe that being on the right side of innovation is going to pay more dividends, figuratively, you'll see more price appreciation by sticking to the new than we've ever experienced in history.
Cathie, are you saying that if people stick to the script as it pertains to innovation,
Yes.
are we speaking the same? I think we're speaking the same language.
I think so.
I'm here for it.
I do have to let you know that, I refer to myself as the first lady of leisure. I've had several different lives where I was an artist, a curator, an attorney, and now all I do is I say I don't work, I create, and I'm able to contribute my gifts and talents to the world however I see fit. And part of that looks like, co-creating this show with Mark. And I do want to let you know personally that as a lady of leisure, that's one who creates, not just relaxes, but one who creates. I want to let you know that your fund, in particular, Ark K, was one of the major components and reason why I do not have to work. And I just want to thank you for that, because it's to the point now where I can just live off of my investments and stick to the script. And but for your fund, I don't know if that would have been possible this soon. So I just want to thank you and the team, because you have helped to change the trajectory of my life and some of the other come up cousins who have been holding and sticking to the script. And they're not the ones who are, as we would say, shaky. They're holding firm. And I just had to let you know that personally.
So thank you. I'm so happy. This is, many people say, why didn't you do what you're doing in a hedge fund? You could earn 2 and 20. And I was saying, that's not why I'm doing this. I'm doing this because for many reasons, of course, first and foremost for our clients, but to really open up the opportunities that many people thought only the wealthy could access. The world is changing. The world is changing. What I'm seeing is many hedge funds who are betting against us, who do cater to the wealthy, are trying to figure out, okay, what are they doing? What are they doing? So I'm so pleased. I'm honestly, it just, I get, when I do some, like I've gone into, whether it's Yahoo Finance or CNBC or Bloomberg, there are cameramen who were listening to me because they had to be there. When Tesla was getting creamed in 2019, and we were trying to say, look, this is why we think this is going to work. The market was against us. The stock was getting creamed, but those people who said, you know what, that kind of makes sense. They were using their common sense and not trying to follow an index.
Yep.
They have said the same thing, and I can't tell you how important that is to me. So we were at dinner with my family, and these two young people at the table next to us, they wanted to pay for our drinks at the table. They were from the Savannah College of Art Design. Really wonderful reputation out there. And these two young people, it was their 1-year anniversary, and they were paying for our drinks. And he said, like, we were about to leave, and he said, we've been listening to Ark, reading the research, and, I want to thank you. And it's made a big difference in my life and my family's life. And I was just so touched by that. Of course, I was going to pay for their anniversary. But just the idea that they would want to do that, how wonderful is that? We are all here to serve one another. I really believe that. 100%. And if I really believe that. And, it touches me so much to hear you say, Jolyn, what you just said, and, to get these other stories, because we are all here to serve one another. So thank you.
Thank you.
Whew. Cathie, how are we doing on time? Because we just officially hit 6 o'clock, and I know that there are a ton of
I'm here for you.
Okay, well, we want to be cognizant of your time because I know that it's precious, and
And
you're also on
I
the East Coast.
yours, yeah.
So we'll get to maybe a few more questions, and we gotta let you get some rest because you're on the East Coast. We're over here on the West Coast.
All right.
Still early.
All right, so I think I'm just gonna pick it, Julian. If
Go ahead. Go ahead.
All right, so. Now, wait, hold up.
I love it. I love it.
Now, Ark has been very vocal when it comes to Tesla. There have been quite a few naysayers against Ark's thesis. What would you say that they are missing when it comes to looking at your thesis?
Yeah, well, in the beginning, most analysts had no idea how quickly electric vehicles would take off because they weren't looking at battery pack system costs and using Wright's law, which is what we use, which is a relative of Moore's law, to figure out the cost declines of batteries. And we said, oh my goodness, Elon Musk and Tesla are moving the ball here. So with innovation, they are going to accelerate the cost decline in batteries. That means electric vehicles are going to take off faster. Now, that was the first iteration. More people understand this now. But in the beginning, in 2014, I don't know if you saw any of the programs where I was on, and they were just, they thought what we were saying was ridiculous, a marketing hype.
I remember that first interview. I mean, everybody was just like,
just trying to put yourself on the map. You're exaggerating it. You're just, this is a marketing gimmick. It wasn't. This is real first principles research. So I think more people understand that now, but what they don't understand is autonomous. Now, there are four barriers to entry that Tesla has put up in the last 10 years. One is battery technology, and they're still much further ahead than any other auto manufacturer. The second is artificial intelligence. They think about Apple. Now, you're all too young to remember this, but in 2007, well, really it was 2006, Apple designed its own chip to develop a smartphone. Mm-hmm. Now, at the time, Ericsson, Motorola, and Nokia owned the cell phone market. Mm-hmm. And yeah, exactly. And I remember listening to them, and they were all talking about fashion and design and this and that. And Apple came in with its chip for smartphones. You may not remember this, but I remember when I got an Apple phone and I was able to access the internet through my phone. I said, what? This is like amazing. This changed the world. They did that because they designed the chip and then moved the smartphone market so far, so fast, that still today they have the lion's share of the profits in smartphones. The others lost.
That was the end of Palm as we knew it.
Palm was another one, yes. Today, Tesla has the only artificial intelligence chip that is going to enable autonomous travel. Yep. The others have not designed their own chips. They're relying on NVIDIA, which is great, but auto companies have this 4 to 5 year design cycle. Tesla is a 1 year. So they're so far ahead. They designed their own chip, and they have collected more real world miles of driving data than all of the other auto and tech companies combined in the world. That tells us that Tesla, at least in the United States, if not elsewhere, will have the first autonomous taxi network in the US nationally. And autonomous travel is going to, from a business model point of view, be more like SaaS, software as a service, which is 80 to 90% gross margins.
Yep.
Compared to electric vehicles, which have 25 to 30% gross margins. Most analysts and portfolio managers are not giving Tesla credit for that. Interestingly, this week, Elon Musk tweeted that anyone with a Tesla car who bought full self-driving capabilities will be able to test this weekend full self-driving. Now you'll have to be right near the driver, but you won't have to touch it every 6 seconds or whatever. You'll be able to just keep your hands off, let the car drive, but just be ready in case the car signals like, I don't understand what's going on here. Then you take control. So I think Tesla is much closer to autonomous than anyone now believes. No one gives them credit. They give Waymo credit, Cruise Automation, AutoX is a Chinese company, not Tesla. We think Tesla's a sleeper here.
Okay. All right. So we got 2 more questions left, and then you're off the hot seat, Auntie. Auntie Cathie is off the hot seat. So we just want to let that be known. Go ahead, Jolene.
Oh my gosh. Okay. I'm looking at our list of questions and it's so hard to narrow it down, but I'll ask this question because this is more of a broader question that we talk about legacy here a lot and like what our impact is going to be. And in particular, thinking past ourselves. And like what we could leave for generations after us. So my question is, what do you want to be remembered most for? And also follow up to that is, if you could impact any area of the world, what would it be and why?
You know, when I think about the end of my life, all I want on my gravestone is something along the lines, it's biblical, well done, good and faithful servant. That's all I care about. Now, the first question you asked, which was legacy. So I'm going to let you in on something. You've heard it first. I hope Lisa Dodd, who I know is listening, isn't going to be too upset by this because it's a little bit of a preview. Do you know who Quincy Jones is?
Yes, he's in Seattle. Yeah, we know him.
I've actually had the privilege of getting to know him.
Okay. Well, he turns 88 on Sunday.
Yes, he does.
Yes, he does. And he is talk about legacy on the one hand.
Yes.
But getting ready to ride the next wave, he's unbelievable. He has surrounded himself by a business development team that blows me away. And so on Sunday, I will be paying him tribute. And we will be teeing up a podcast series leading up to the announcement of his next big wave. So talk about legacy, and talk about the future. You know, it's really exciting.
That is so cool.
He's always into something. Like he's always up to something. He never stays put. Never.
No. And I think, like, you think about, I mean, this is what keeps me young. I'm not a spring chicken, but what keeps me young are these new ideas and new waves, you know? And in fact, when I think about all the waves that are going to be created by innovation, we talk about 5 platforms, 14 technologies, all of these S-curves, which are exponential growth trajectories, and they're converging. You all are in such a great place because I know your cousins, our cousins. Can I say that?
Yeah, the cousins.
Yes. No, honestly, I know they have an appetite to catch these waves, and the the waves are converging. And so the energy coming out of these waves is explosive. And I do think Quincy Jones and team, he couldn't do it without his business development team. They're pretty amazing. They're about to catch a big new wave, which will make the First Lady of Leisure very happy.
Okay.
Yes, very happy. Rewarding artists in perpetuity.
Oh, wow. I know what that sounds like. That sounds like 3 letters that I'm not going to say.
Yeah, right.
Okay.
Where's Brian when you need him?
You heard it here first. That's exciting.
That's amazing.
Wow. Thank you for sharing that.
I don't think
I don't know how you're going to follow that up.
I don't think
that's where I'm like sitting here like, okay, I'm like, okay, no, we got to do this.
Okay.
Because we have to let you just like rock the mic, Auntie Cathie, where it's like you get to talk about something in which that honestly, you shut down the internet. You and your team shut down the internet every year when you release this.
Oh.
And that's called the big idea. It's like everybody is like waiting for that, just like back in the day where you'd be waiting for the newspaper. And which like every Saturday morning I'd be waiting for the newspaper because that's where the dope comics in the back section of the newspaper would be available.
Yeah.
And so I want to ask you, out of all the big ideas, and they're all phenomenal, if you had to choose, what are your top 3 big ideas?
Okay, it depends what you're talking about. If you're talking about financial impact, I think autonomous ride hailing is going to be one of the most important. We think that the revenues from autonomous ride hailing, which are 0 right now, will be $7 trillion. Think about that, 7 trillion. This is global. US economy today is 21 trillion. I'm telling you, autonomous ride hailing, 7 trillion in 10 years. Revenues, can you imagine what the market will pay for that?
Wow.
Okay, so that's huge. If you're talking about life-changing, I would have to say curing disease is life-changing. In fact, it is adding to life. And we think that the genomic revolution, and when it comes to cancer, which is one of the biggest killers out there, when it comes to cancer, we think multi-cancer screening and allogeneic CAR T or immunotherapy, meaning taking off the shelf donor derived T cells, healthy people giving their T cells which fight disease and planting them inside people with cancer. I think that's going to save thousands of lives. And we'll be able, with multi-cancer screening, to identify cancer in stage 1, which means we'll be able to save most of the lives of people who are diagnosed with cancer. You know, cancer still is a death sentence for many. That is going to change. And so we think the genomic revolution is from a life and health is number 1. My mom always used to say health is number 1. So that is quite provocative from that angle. And then the third one, which captures the imagination of young people and older people today, space exploration. So space exploration, we know that Elon Musk wants to get us to Mars, and I think that will happen. I think that will happen in my lifetime, which that's saying something. But I think more important out of space technology will be hypersonic flight. We will be able to travel from New York to Australia in 2 hours if we get this right. And it's the convergence of a lot of rocket science, robotics generally, artificial intelligence,
Autonomy.
autonomy, yes, supercomputing power. I mean, space exploration is the convergence of so many of these platforms. So if I had to, those are the three I'd choose for different reasons, but they're all going to be incredibly important to life as we know it, and incredibly important to your portfolios, cousins.
Hey.
Oh, she told you, Cathie. She told you.
Cathie, thank you so much. I mean, I understand that, you know, your time is precious, and honestly, like, this was just an amazing interview. And honestly, I hope that if anything that everybody was able to take away is, one, dream big, have, you know, follow those big ideas, invest in those great ideas, and always keep innovation on the forefront.
Amen.
Honestly, it's like, you know, there's going to be things in which that happen along the pathway, but honestly, you know, what we always say here at the Come Up series, sometimes all you have to do is just zoom out and then you see the bigger picture.
Amen.
So I hope that each and every single one of you were able to pick that up today. Cathie, do you have any final words for the cousins or for the people back at home?
Yeah, as you were saying that, Mark, what came to my mind, and one of the reasons I founded the firm, was the same person who said to me, "Oh, you mean the future of investing is investing in the future?" That person also said, "Wow, this is all about creation, God's creation, right?
Yes.
We're all here to create. That's when we're happiest, right? Right? Yes. Yes. Jolyn knows that. We all know that. So when I think about what has happened to the investment industry, this whole worshiping at an idol called the index, that is not what investing is all about. Investing is all about creating and God's creation, right? Investing in the future. Why are we here? We're here to procreate, but and of course, part of that means children, but part of it means really creating the new world, not investing in the past. So that's what I would say.
Well said, Cathie. Oh my gosh, thank you so much. First of all, I just want to let you know that the chat is going wild. All the cousins, the Come Up cousins, have officially deemed you a honorary cousin, as well as Auntie Cathie, and not everybody gets that title. So
Everybody gets that title.
they're Auntie Cathie for sure. And you are welcome back anytime.
Thank you. And I thank you. I know, Mark, that you have been involved with the Innovation Foundation, or you've contributed to the Innovation Foundation that I've started. And it's all about leveling that playing field and making sure from an education point of view, everyone gets an equal chance.
Stay tuned, everybody. Well, Cathie, thank you so much for joining us.
Thank you.
Y'all, thank you so much for being here with us. Until next time, I'm Mark Monroe, and we've had with us today.
You get to say your name.
Cousin Cathie.
Hey!
And I'm Jolyn GC, and the place to be. So thrilled to be speaking with Miss Cathie.
Thanks.
And this is